Well, welcome everyone. It's really lovely of you to attend and give up your lunchtime to join us on our webinar around how to maximise your pay. Every month Bookssorted looks at highlighting opportunities for contractors, and for this month it's all around salary sacrificing and maximising your pay, along with a little bit of wellness given the current situation that most of Australia's in, except for WA and SA at the moment, and that's changing daily. So I hope everyone's staying safe and staying well. Today what we'll talk about is the basics of maximising your pay through different methods and salary sacrificing and things. But first, before we start, I'd really like to introduce you to our panel of one, which is Jen. Jen's our accountant. She's from Panorama Accounting. We've worked with Jen for some time and I've known Jen for a number of years. So what we'd really love to encourage you to do is, if you have any questions about anything we're talking about today, or even if you've come with questions around existing opportunities that you may see to maximise your pay, if you could just pop them in the chat, that'd be awesome. And Dinah will go through a little bit of the housekeeping around that. So webinar should go for about an hour. And what I'll do now is Dinah, our comms person, is here, and she'll just talk you through a little bit of the technical side of the Zoom call. Dinah, over to you.
Thanks, Christine. Hi, everybody. And again, thank you for joining us today for this Bookssorted Learn How to Maximise Your Pay seminar. And we hope you are safe and well, no matter where you are across Australia. So that today flows as well as possible, we want to let you know that we are happy to take questions at any time, but what we might do is reserve it for the end of each slide or the end of each section. So if you do have a question that of either Jennifer or Christine, please feel free to either raise your hand and I can unmute you to ask that question, or if you'd prefer, just pop it into the chat, and you can see the chat at the base of your screen there. So just pop your question there and then I can read it out to Christine at the end of each section. If you would like to remain anonymous and you don't want other people to see your name popping up in the chat, that's fine. You can just change within the chat in the drop down. You can send your message just to me, and that's Dinah Bryant in the chat, and only I will see it then, and then I can also read it out to Christine. If you use the Q&A, that's fine. I'll keep an eye on that as well, but the main one I'll be monitoring is chat. Outside of that, I guess everyone knows where the bathrooms are, given you're at home. Sorry, just trying to lighten the mood, bit of a gag. So if you do need to take a bathroom break, feel free. I'm sure you won't miss much. And if you do, feel free to let us know that you've missed something and you want us to go back tracking. We hope you've got a drink, a cup of tea, some snacks to take us through the next hour. Anything that we may not have the answers to straight up today, we will take those questions on notice and we can come back to you directly as well. I think that's about it from me, Chrissy, and back over to you and Jennifer.
Awesome. Thanks, Dinah. Thanks for the introduction. And yeah, keep bringing the questions in. We love a good question. We also love a good snack in COVID. So I hope you're having a lovely lunch. That's the biggest challenge of my day, keeping away from that jolly fridge. Anyway, and the coffee machine. But I digress. Let's move on and learn how to maximise our pay. So what I thought I would do first was run through, and I'm sure most of you understand what salary sacrificing is, but there may be some of the newer members of the Bookssorted family that aren't familiar with what salary sacrificing is. So I thought I will run through how that works, and that will form the basis of today's webinar, because the way to maximise your pay is through minimising tax through salary sacrificing. So what I have on the screen now is a sample payslip, and on the left-hand side, it's a standard payslip for Bookssorted, and on the right-hand side is with a laptop has been salary sacrificed. So what we'll do is go through the first side, which is left-hand side, no salary sacrificing. So a standard a standard month for a contractor is on average 160 hours. This slide's a little old. This used to be the average rate of a contractor, but thankfully it's gone up quite. It's probably at about 122 now an hour, but we'll go with 110. Our fee of 1.75% is levied on that. And what you have there where it says total wages is actually the gross wage. So that's the hours times the rate equals that 17,600. So that's the gross wage for this contractor. Our fee at 1.75% is $308. So as you may know, or you may not know, our fee is actually a business expense and salary sacrificed out of your payment. So that means it's removed from the 17,600 before super and tax are applied. So the 17,600 minus the 308 gives us our super amount, and then the superannuation at 10% is applied to this amount here. And then we have our taxable income. So the tax is then applied through the ATO tables, tax tables, and that equates to this. And then the take-home pay for this contractor is $10,771. So that's a very standard sort of payment. The only salary sacrificing happening in there is just our fee, and then just a normal tax and super runs through on that payment. So on the right-hand side, what you'll see is exactly the same. 160 hours times $110 an hour gives us exactly the same amount here. The admin fee is the same at $308. But what this contractor's done this month is bought some portable hardware. So bought a laptop for $2,500. So the total pre-tax expenses is, instead of 308, it's 2,808. So that means that the superannuation amount is less, to be the 10% of 14,792. And then if you see here, the taxable income is less, and it's less predominantly, mainly because of this laptop that's been purchased. So the tax on that lesser amount is about $945 less. And so the contractors pay for this pay period with the laptop brought back in down here is about $1,500 more. So the benefit of salary sacrificing that laptop is there's less tax paid. There's also, with salary sacrificing the laptop through Bookssorted, you also get the GST on that purchase as well. So that is the basis of everything we'll talk about today. This and how we at Bookssorted can help you maximise your pay. So I know this like the back of my hand, but there may be participants out there that have any questions. Dinah, are there any questions around this slide at all?
Sorry, Christine, just unmuting myself there. Yes, we do have one, Chrissy.
Yep.
Is salary sacrifice only, sorry, my screen just moved. Give me 2 seconds again. Is salary sacrifice only for items that are newly purchased? Can you salary sacrifice your mobile phone or car if you use it for business-related expenses? Normally, I claim these at tax time.
Good question. And we are going to cover both cars and portable hardware in the next couple of slides. So if that participant's happy to wait, we can go into more depth in that in a minute.
No worries at all. There's another one here, Christine. Why did the portable hardware amount change from above?
So the 2,500 is exclusive of GST. So when we claim it through your payment, you cannot claim the GST. But when you're repaid it the full amount. I'm guessing that you're questioning the $250 difference, and the difference is based on the GST paid. So when you bought the laptop, it would have cost the contractor $2,750. So the contractors reimburse that full amount, but we can't claim GST pre-tax. yeah, because the ATO sees it as double dipping. So you cannot claim the GST as a pre-tax expense, but it is paid back to you, so you get the full amount back. So hopefully that's answered that one. If you have more questions, then we'll go into the GST side around portable hardware as well as we go through the slides. But if that participant has more questions, please ask, or I can get back in touch after the webinar today. Any others?
I think it must have made sense, because there's a thank you for your response to that one there, Christine. There is a question around home office expenses, but we can probably cover that off on that particular slide, Christine. Would that be right?
Yes, I think so. Yep.
And there's one more new message here. Is this only for contractors or salaried employees?
It would only be, we only work with contractors. Salaried employees can do it, but you need to talk to your employer to see if they're set up for that, and then they would legitimise those expenses. So for contractors using Bookssorted, that's what we're talking about today. There are differences with different companies, so you would have to check with your employer to see if you could do these.
I think we're all clear and we can move to the next slide, Chrissy.
Awesome. Okay. Thanks for the questions, guys. Keep them coming. So what we touched on in the last slide was a laptop. And what traditionally contractors have been entitled to claim is portable hardware, because contractors are seen as a contingent moving workforce between workplaces. And so therefore they need the sort of technology that supports that kind of role. So, and also utilising the latest technology means that you're on top of everything that's available if you're building apps or any sort, I'd imagine, most softwares and things within your client's site. So the main things or items of portable hardware that contractors can salary sacrifice are phones, tablets, smartwatches, and laptops. So these can be salary sacrificed in the fringe benefits tax year, and the fringe benefits tax year runs from the 1st of April to the 31st of March. So in any, let's call it FBT year, you can salary sacrifice either a phone or a smartwatch, or a tablet or a laptop. Now, the reason for this is that the ATO sees that phones and smartwatches are for receiving data, so you can have one of either of those, and tablets and laptops are for sending data, so you can have one of each of those. Of course, there's an exception to the rule, which is an LTE smartwatch, and if you have an LTE smartwatch, you can have a phone and a smartwatch. And I know the Apple one has been for quite a few years, and pretty sure the Android one is LTE as well. So typically you might have your emails on your watch, something like that, and then as long as it's being used for 50% plus business use, then it can then become a salary sacrifice item, and it then becomes a piece of work, part of your work assets to enable you to do your job. So when so all you need to do to claim that is just send the receipt through when you send through your timesheet, and it's salary sacrificed in the next payment. The benefit of you working this through Bookssorted as opposed to putting it through with your tax at the end of the year is that Bookssorted as your employer can take a full salary sacrifice portion for you. So if you put it through with your tax accountant at the end of financial year, they can only depreciate the item. They can depreciate it including the GST, I believe, but it will be depreciated. Whereas if you put it through Bookssorted, you'll get the full tax benefit, and you get the full tax benefit in real time. So if you say bought a new tablet this month, we're only 2 months into the new financial year. So you would, if you put it through with your tax accountant at the end of the year, potentially you'll wait 12 months to get any benefit out of that purchase. Whereas if you're on, say, a weekly payment and you've bought a tablet on the weekend, you'll actually get the tax benefit of that within 10 days. So it's a real thing about real-time benefit as well when you're salary sacrificing through Booksorted. Yeah, does anyone have any questions on that?
We have got some questions there, Christine. The first one is, most companies provide corporate/office laptops. So how can we justify a new laptop as it would be for personal use?
Yeah, the litmus test on salary sacrificing is it must be for 50% work use. We will send you a declaration to state that, and that's part of our sort of audit trail. And we know definitely in government departments like Defence, they are provided with a lockdown tablet, laptop or phone and so they don't claim these items. So yeah, so that's in that case, if they're not used for work, you can't claim them, unfortunately.
And there's just a comment there from Yasmin, and she says, oh, that is good to know. Thanks, Christine. RE salary sacrifice on the tax benefit on purchase of hardware. But then she goes on to say, so I use my laptop for agency comms, but will have a laptop for the Commonwealth. I trust I can claim a bit of both? Question mark.
If both those laptops are yours and they are used for 50% plus business use, you can claim one in any FBT year. So that might be a good one for Jasmine, you and I to have a chat with after this, so I can get a deeper understanding of the type of work you're doing and things like that.
And the response there was, yes, please, Christine.
Okay, no problem. We'll give you a call after. Any others, Dinah?
That's all there at the moment, Christine. I think we're safe to move on.
Awesome. Okay. So the next opportunity to salary sacrifice is a wonderful one, training and education. As you may, if you've been contracting for some time, or even if you're new to contracting, essentially what contractors have talked to me about is that you're your own brand. You're as good as your last job, and you sort of have the opportunity to build your knowledge and then give yourself the opportunity to see roles in new areas of IT, or just whereas tech changes. So I'm thinking cybersecurity as that sort of field just changes and grows, and there's new ways of hacking into systems being developed by the sounds of things every minute. There's opportunities to go and do training and understand how to stop those risks or build better software or apps and things like that. So the ATOs recognise that this is really important in the IT space, and so there is the opportunity to take on training and education as a salary sacrifice expense. So some of these courses, and before COVID, people would fly to Brisbane for security courses. We had quite a few people went up. There was a special course up there that some guys in Defence were doing. So you could fly up, and meals, accommodation, flights and the course were all able to be salary sacrificed. But obviously that's a little bit different now, but the course costs can still be quite significant. So I know some of the agile stuff's about $3,000, $3,000 to $5,000, and some of the security courses sit in and around there as well. So the course, but it could be something simple like $100 LinkedIn training course, and that as well can be salary sacrificed. So the idea is to encourage people to continue with their professional development. The idea from the ATO is to continue with their professional development and not be held back by the cost of these courses. And I think my husband is an IT contractor, so that's how I got into the payroll side of this. And I know for him that being able to do those courses means that he, as his own brand, is more marketable. So that operates exactly the same as any other salary sacrifice. You just send in the receipt at the end once you've paid for the course. You get a tax invoice, and then it's salary sacrifice simply through your next payment. As long as the course is business related, and we actually have a list of courses at the office of what people have taken, and it's far and wide because we have such a diverse range of skills that use Booksorted bookkeeping payroll service. Yeah, so does anyone have any questions on that one?
I'm just checking, there is one that's just popped in, Christine. From Simon, could this include certification exams as well?
If they're directly related to your current contract, yes, it can, definitely. Yep. So Agile, Scrum Master, those sort of certifications we saw a lot of, just as an example. But yes, if it's related to your current work, yes.
There's also another question there, Christine, around the ATO tool equipment being $300 or less to be eligible for a full deduction, but I think we cover that in a slide further down, so we might cover that off then.
Yep.
But I think that might have been Cindy. If you've got any questions once we get to that slide, please feel free to pop them in.
Yeah, definitely. We'll answer Cindy when we get down to that one.
And no further questions there, Christine. I think we're safe to move on.
Excellent. Okay, fantastic. Okay, so the next one, and this is a good one, is salary sacrificing cars. So there is a couple of ways that you can do it. I'll explain one, and then when Jen has her piece, she will explain the other way to do it. But novated leasing is a very good way to maximise your pay. So with a novated lease, you have the loan, so you take out a car loan, and that car loan can be salary sacrificed. A novated lease is a mix of both running costs and the car loan, so it's two parts to a novated lease. The loan part's separate, and then you have the running costs. So there's this, we touched on it a little bit earlier. There's a fun little tax called fringe benefits tax, which is applied to a car. And there's some calculations around how much that works, but it's roughly 20% of the car value when the car's purchased. So that other part of the car is paid after tax, and so but depending on the cost of the loan, is still a really good idea for car leasing. If you own your car, that is the best way to have a car. But if you are in the market for a new car and you are thinking of taking out a loan, then novated lease is the way to go. If you're contracting and we effectively on that car lease become your employer. So with we had a question a couple of weeks ago about whether you could salary sacrifice a second-hand car, which you can. There are a couple of clauses around that. One is that the car is less than 5 years old, and I can confirm that as well. And it also needs to have a certain amount of kilometres on it when you buy it. So a lesser amount of kilometres when you buy it. But I think that's a fantastic way to get a car because, you know, the value drops by 20% when you drive it out of the showroom. So why not take a loan out under those conditions and not have to pay so much back to have that car? So, that's essentially, some people already have existing cars and they'll bring them into Booksorted. So they may have a car that might be working at government and have a novated lease car with government, and then they just renovate it or bring it across to Booksorted when they come across. Or some people come across and then would like to have, they need a new car, so they would take on a novated lease at that point. how we can help you to understand how much the car will cost you is that we can do some pay slip modelling for you. So it may be that you look at the Porsche and say, yep, I'd love a Porsche or a Tesla, and then we can do some pay slips and show you what the impact on your pay will be. And then you may decide to stay with that decision, or you may decide to change the type of car that you want. So essentially we can work with you to ensure that you get the car that suits your budget and maybe the car of your dreams, because that's what you can have as well. So yeah, does anyone have any questions around cars at all?
No specific questions around cars. We do have one participant who's just waiting for the vehicle of her dreams to come into the country.
Oh, lovely.
But I want to throw one at you, Christine, that not necessarily probably a novated lease, but back to salary sacrifice. Can I salary sacrifice an electric unicycle for business use?
Oh, that's a good question. You can do bikes, electric bikes, e-bikes. They need to only travel to work and back from work. And Jen, jump in at any time. We've only done one e-bike in 15 years. We are partnered with Australian, which is an e-bike novated lease company. So you can do that. An electric unicycle, Jen, what's your thoughts on that?
Yeah, that would be classified as an e-bike also. It would fall under the same category. The ATO issued a new, I guess, a discussion paper because there's been an increasing interest in these, obviously, in recent times. So although they've been around for a while, the ATO has now actually issued some documentation on what their opinion is on salary sacrificing them. Basically, the main thing is it can only be used, as Christine said, driving to and from work. Otherwise, it's not an effective salary sacrifice arrangement that will be allowed. So there's no allowance like the laptops have for a personal use at all. And the same as Christine, we haven't really seen many because there's not many that actually meet that criteria. So can be done, but it's a bit of a tricky one.
And I think they become tricky because it's hard for any employer to understand if someone's using it for personal use. And that's where the tricky part of that comes. But I haven't seen an electric unicycle. I've seen plenty of e-bikes. We live quite close to the mountain bike track, so we see a lot of them there. But I haven't seen any unicycles, so I have to keep my eyes out for those. Yeah.
There's a similar question around bikes, Christine. What about a bicycle for those wanting to cycle to work?
Jen, another one for you. I know the e-bikes can be, but...
Yeah, so if you're using it, I think under the same principle, it would need to be to and from work. When you're thinking about what you can and can't salary sacrifice, the good rule of thumb is to think, is it going to be a deductible expense in your tax return normally? So what would the ATO's opinion be on that? Normally, bikes fall into a separate category, different to cars in terms of transport, and they have to meet different criteria. So cars you can usually deduct if you have a bit of personal use, but bikes they're pretty strict on. So e-bike or normal bike, I think as long as if you're doing it to and from work 100% and not using that bike any other time, I suspect it would be allowable. But again, that's a pretty hard hoop to jump through. But yeah, depending on your circumstances, that might work.
We'd also need to find a company that can put a lease together around that as well, that would fit into the terms and conditions around ATO novated leasing. So we do have a company, like I said, that we've partnered with for e-bikes because they can structure the lease that way. And if it was going to be a push bike, which is so good for the environment, and I think the government should actually fund this or back this a bit more, but if it was for a standard bike, then we would just have to look at the lease arrangement as well and make sure that it fits in with those ATO lease arrangement guidelines. But I think that's a fantastic idea. And I saw, sure, if we spoke to our green member down here, Shane Rattenby, he'd be straight onto it because then there's absolutely no carbon, there's no charging it or anything. But that's a great question.
My husband's a cyclist, so I know they can cost as much as cars. So you might want to lease them.
Yep. So, but if that person is quite interested in it, please leave the details with Dinah. We'll give you a call and see what we can do with that as well.
Yeah.
Any other? Sorry.
There is I guess, a continuing question from that one. So it's limited to novated lease, ? So you can't salary sacrifice a bike if you're buying outright, ?
No, you can't salary sacrifice it outright. And it must be through a lease. That's the advantage, is that lease. That's the tax advantage. So I think it goes back to what Jen said around, if I took this to my tax accountant at the end of the year and said, can I salary sacrifice this? I bought a push bike. They'd say no. But I bought a push bike on a novated lease for business use only. Okay, let's talk about that.
Christine, there is another question there around novated lease. Is there a dollar value, example $50,000, where it becomes more beneficial to undertake a novated lease, or is it more around your income and tax brackets?
Income and tax brackets. So people who are, say, help desk people who maybe are on between 25 to 50 an hour, I would not recommend that they looked at a novated lease, because there's only a minor tax advantage. For the higher end earners who are sitting up in the 40 plus tax bracket, that's where the advantage in novated lease sits. So is it around the value of the car? Not really, because there's so many opportunities when you take that lease out and organise the repayments to get that you can structure the lease over 5 years. You can have a bubble at the end of it of $30,000, which means you're only going to pay $20,000 over that many years. So there's many things you can do with the lease, but what we're looking at is maximising your pay. It's not based on the value of the car. It's really based on how you structure that lease and how much you want to come out pre-tax in and around that lease.
In that vein, Christine, a question around, do I have to salary sacrifice a new car? Can it be a second-hand car?
Yes, yep, it can definitely be a second-hand car. And I mentioned that a little bit earlier. There are a couple of conditions around that car, second-hand car, based on number of kilometres and the age of the car at the end of the lease. And so if that person is interested, Dinah, if you could get their details, and then we can put you in touch with our preferred supplier for car leases, and they can talk to you about how you can do that, how you can salary sacrifice a second-hand car. Any others, Dinah?
It looks like we're all clear on that section there, Christine. I think we're safe to move on.
Well, great questions, guys. You put me through my hoops on that one. Love it. Keep them coming. Okay, now here's the best one for today, because we're all sitting at home, or the majority of us are. And like I said, when we always the IT contractors have been seen as a contingent workforce. So previously, when contractors said, I bought a monitor, I bought a desk, and this is pre-March last year, they had to take it to their tax accountant at the end of the year, and we couldn't salary sacrifice it. But with COVID and what happened last March, where we saw people walking across Northbourne with a couple of monitors under their arm, trying to fit it all into the tram to go home and start to work from home, what was wonderful was that the ATO immediately recognised that these people are working from home, they're making purchases for direct business related use, and they needed to recognise straight away that there had to be some tax benefit for this. So what can be salary sacrificed for home office use are items up to $300. So an individual item up to $300. So desks, chairs, monitors, mouse, keypad, everything to make you comfortable at home for work, with an individual item of $300. So computer consumables, USBs and things like that, which have always been salary sacrificeable. The expense must be directly related to you earning income, which I don't think there's much question about that. And if the item is over $300, it would then be something that you would take to your tax accountant at the end of the year. So this, we did a lot of these claims March, April last year, and but we're seeing a few more come in now. People want maybe an upgrade on the monitors and changes and things like that. But there is that recognition. There's also another side to this, which is what your tax accountant will do at the end of the year. So I might hand over to Jen now, and she'll talk you through, because there's a couple of options when you're salary sacrificing or making some claims on working from home. So Jen, if I could hand this over to you now.
Yeah, absolutely. And you're exactly right, Chris. The ATO recognised quickly that some of the old methods of claiming home office expenses that have been around for many years, a lot of them are just so onerous in terms of record keeping, it just wasn't going to work now that the majority of workforces around the country are working from home. So they very quickly responded and have introduced as 2 claiming methods that we can use for working from home expenses. The first one is one that has always been around, which is the actual cost method. Now, the reason I say it's onerous is to meet the criteria to claim actual costs, you need to have a dedicated office space at home. So it can't be the kitchen table. That's not a dedicated office space. You really need an office set up that you use purely for work. Once you've got that space, you need to measure the square meterage as a percentage of your entire home. And then you can actually have to go through and add up all your costs that you've spent throughout the year, claim that business use percentage in your tax return. So it's a lot of work to do to get claims that you often then see that aren't actually that large anyway. So the ATO said, well, no one's really using this. It's really quite off-putting for people. Let's bring in some other methods. There was another method that's been around for a long time, which is an hourly rate method. It used to be 45 cents an hour you could claim, and they've very quickly bumped that up. It's now 80 cents per hour that you can claim. Now what that covers is all your electricity, phone, home internet, that sort of stuff. What you really need to be able to claim that is you have to justify with timesheets, if audited, to prove your hours of work at home. So it's not as simple as just saying, well, I was, working 8 hours a day, 5 days a week, 45 weeks of the year. You actually, if audited, need to produce timesheet details. Now, it's my understanding that through Bookssorted, they'll actually be keeping that timesheet data for you. So if you were to undergo an audit, having claimed using that method, all of that information would be there and available. So that's a pretty handy one to have. Home office equipment as well. So if you're going to use the 80 cents per hour method, home office equipment is assumed to be included in that, things that you already have. But if you're out buying new office equipment, you can depreciate that. And this then comes back to other items like we talked about for salary sacrificing before, like the portable devices. If you can salary sacrifice any of these things, you get the benefits straight back immediately. With depreciation, if you buy something that's over $300, you have to claim that over the effective useful life of the asset, which can be up to 3 years for some things. Desks and things are more like 10 and 20 years. So it can actually take a long time to get that back. So the more you can salary sacrifice and get back, the better. But then, yeah, we have these claims then you need to also.
That's fantastic. That 80 cents an hour thing's really good, especially for contractors, because you have all your timesheets, or we do, or your recruiter does. So they're very easy to access if you need that. And a really great point around anything over 300, the benefit isn't quite there as much as if it's under, but there can be special stand-up desks that people require, or special chairs, and they will go over that $300 mark. But IKEA have great tables and desks. They might have been, I think they've still got plenty at the moment because everyone bought them out last year, but
yes.
Yeah, they're all under that 300 mark. So yeah, so guys, if you are buying anything and you have any queries, I know we're all doing that shopping online at the moment, but if you're not sure for any of this, any of your portable assets or working from home equipment or training courses, if you're not sure, please reach out to us first before you make the purchase so that we can confirm back to you that, yep, that will be fine. One of the best ones I had was an entrepreneur's course down at Antarctica, and someone was just about to buy the cruise ticket, and I had to rain on his parade because that didn't quite fit in with the directly related to earning an income as an IT contractor. But please, yeah, no questions too out there. We'd love to help, and it may be that we can help, and then that's something new that we can offer to our full community as well. So thank you, Jen. That's a great explanation. I found that 80 cents an hour thing quite hard to get my head around, but you've just explained it beautifully. So thank you. We'll move on, Dinah.
Christine, a couple of questions there. Home computer, where it has been built and components to build is more than the $300 home expense allowance mark. Any advice around that?
Jen, we had,
Yep, so that you have to add up the costs to get it to a usable position. So all the things required to get that asset to be able to be used. So all the costs that you've spent while building it, at the point in time that it's a usable asset, that total cost, if that's over $300, you'll need to depreciate typically, unless Christine would be able to then salary sacrifice it perhaps. Or not?
Not really, because it's a computer, not a laptop.
Yeah. Oh, gotcha. Cool. Not portable.
Yeah.
So that would have to go on your tax return as a depreciable item. The depreciation rate, I think, for computers maybe it's like between either 50 or 60% per year. So you would start depreciating that one in your tax return. And the date you start depreciating from is when it's purchased. When it's ready to be used.
Okay, that's great. That's really good to know. That's fantastic. That's awesome. Thank you, Jen.
There was a thank you to the answer of that question. We have a comment from somebody who's just said, ouch, just bought $600 monitors.
They're still deductible, but just take you a little bit longer to get your money back.
Yeah. And like I say before you head out or jump on the internet, please just reach out to us, and we can help you and make sure that if you wanted to salary sacrifice it straight away, we can just confirm the ruling around that back to you so that you can make most of pay through us essentially. But that is a bit of an ouch, especially if you've got a couple. Okay.
So Christine, Yasmin, who we're going to come back to after the seminar today, has also said, so with all these items that I had no idea that I could salary sacrifice, definitely need to chat. Also, do you have to purchase, then claim it through you as an expense after we've had a chat, re the purchase?
Yes, you do need to purchase it and send us a copy of the tax invoice or the receipt. So, because some people will book, let's say, for example, training courses, some people will book on a training course, but it's not until it's actually paid for that you can claim it. I think that's your question, Jasmine?
She's definitely, she says, great, that makes sense.
Okay, cool. Yeah, just want to make sure. All right. Any more questions about this, just hit us up in the chat, or we can reach out to you after this.
I think we're safe to move on. Yep.
Awesome. Okay, so Proprietary Limiteds are the new black in the IT contractor space. We are seeing a lot of our contractors moving to opening their own entity. It's always been a bit of a trend up in Sydney, but the contractor market's quite different up there. It's the long-term, the career contracting opportunities in Sydney aren't there like they are in Canberra. But with the changes in the contracting payroll space, I guess, over the last, say, 6 to 7 years, where payroll tax is no longer an exemption and workers' comp changing for payroll companies and agencies, the flourish of people opening their own PTY has been quite interesting. I think also for contractors with an opportunity to jump on the DTA panel as well and go direct to government as opposed to working through an agency and therefore maximising their pay in a different way has also promoted the idea of proprietary limiteds. So Booksort Best Kept Secret is this is our grassroots. We actually have a number of startup recruiters who are just on the DTA panel, and simply contractors who wanted to start their own PTY because they are doing some sort of app development or software development as a side hustle, and so wanted an entity to be able to push their contractor payroll through, and then also the other revenue that they're getting from their other roles, other sort of side hustle through as well. So Booksorted can do the end-to-end process. We can invoice your client, do your bank recs, do your BAS, and the whole box and dice within that proprietary limited space, because we do understand that most contractors are working huge hours, and potentially some may be out of their depth in the bookkeeping space. So we can also offer advice. So if you're thinking of starting up a PTY, it's an interesting proposition, and I think that with a PTY there are tax advantages, but there are also costs. So setting up a PTY can typically cost you with your accountant, or I'm not sure how much Jen charges, but there's up to a $2,000 charge for that. There's also ASIC fees annually, which aren't that much, and they're a business expense. There's also a company tax return, which again can be between $1,000 and $2,000 a year. So there are some costs associated with this, but then this can also open up really big opportunities for maximising your pays when you structure a proprietary limited with other tax advantages that someone like Jen can help you out with. So yeah, I'm not sure if anyone on the call today has their own PTY. I'd be interested to know if you do. And Jen has some other ideas so Jen and I partner. So if someone is talking to us about opening a PTY, and we've had quite a number recently, Jen and I partner together, and Jen opens the company and sets up the GST and the tax file number and everything that needs to go with that, all that compliance stuff, and then Booksorted then support that proprietary limited with the bookkeeping services and take the headache away from the contractor having to manage that. But Jen, did you have anything else you'd like to add to the PTY space?
Yeah, so I think the reason, and I'm not sure if you all read the same websites as I do, but the reason why people are getting a bit more interested these days in setting up their own proprietary limited companies is the company tax rate is now dropped down to 25%. So that gets announced in the media, and you hear this and you go, right, well, instead of paying my top dollar, maybe I'll be able to cap my income at 25% tax as well. It sounds fantastic. Yes, that sounds great, and it can be done, but it's actually not a setup that really works for everybody. There are requirements if you are operating as a company that you don't receive 80% or more of your income from one source. If you do that, then you have to, it's personal services income has to go into your tax return anyway, rendering the structure ineffective. And there are other little hoops to jump through as well. So when you're actually taking money out of the company, which you need to live, you pay a wage, you pay tax on that at your rate anyway. So there are things, it can be done. It's an effective way if you have a lower income earning spouse, and you can meet the PSI rules to actually split some income and save a bit of tax. But it certainly isn't a silver bullet. It doesn't actually work for absolutely everybody. It's worthwhile having a look at it for your individual circumstances. But oftentimes the reason why we're seeing a surge in popularity is this big announcement about 25% tax. So yeah, it definitely needs to be worked through. Sometimes things sound too good to be true, and they are.
Yes, sadly. And I think that tax piece there, where it's taxed at 25% when it sits in the entity, typically Correct. IT contractors are taxed at 40%. So when you withdraw that money from the business or from the PTY, then that extra 15% is levied at that point. So sadly, the ATO have seen it all, and they're just getting better and better with their data matching and everything. And so it's something that you can't do. But I think, as Jen said, if it's set up right, and you utilise your accountant to make sure that it's A, compliant, and B, you're making the most of it, there can be some real opportunities in that. Yeah, and from, I guess, from the bookkeeping perspective, people like to just to sort of not have to worry about that. And from our side, this is our bread and butter. This is what we've done for 15 years. So we understand, obviously, the bookkeeping side, but also our niche is IT contracting. So we can also help you with those additional deductions that you may be able to make if you're running your own PTY. Any questions on that one, Dinah?
No questions there, Christine. Free to move on.
Okay, very good. All right. Well, with all that, I think we do need a break. When we'll get one outside of Canberra or Sydney or wherever you're calling in from is up in the air a little at the moment. But some people may or may not be aware that we do have a leave or set aside account. As we know, all those leave, sick leave, carers leave, it's all built into our hourly rate. So if we don't work, sadly, we don't get paid, as in the IT contractor space. So Bookssorted recognised that and thought, yeah, people need breaks. In most businesses shut down over Christmas, and so there's a couple of weeks there for people without being paid. Also, unplanned leave can be carers leave or sick leave for yourself, or, you know, heaven forbid, we might want to go away and have a holiday. So what we have is this set aside account. So you can structure it however you want, and that's the beauty of using Bookssorted payroll service. It's a customized payroll service to help you. So with a leave account, that's a prime example of a couple of scenarios that we've had in the past. So we had one of our contractors said, I need $1,500 in the hand, net pay, every week for 52 weeks of the year. So some weeks he'd do like 50 hours, some weeks he'd do 30, but every single week of the year, he would get paid his $1,500 a week. And we just wash that in and out of the leave account. Other people will say, any overtime I'm doing, anything over my 40 hours for the week, I'd like that in the set aside account. Others will say a dollar value or a percentage value. So how that works is, if you were to nominate $1,000 a month to go into your set aside account, we take that out pre-tax, and then with the rest of the money that's paid out to you, that's where the tax is applied. Then when you say, oh, I'm going to have a break, I'd like to withdraw that $1,000 now, then that's when the tax and super is applied. So that's how that works. No additional charge for that. It's quite handy. We find it very popular with people who are new to contracting because they're used to having leave and sick leave, or seeing their leave on their pay slip and knowing that there's sick leave there to support them if they're unwell or need to do some carers leave. And so it's a nice buffer for them moving into contracting as they get used to having that flexibility around their payment. But we also see long-term contractors who see a real benefit in this as well. So it's a great little thing to have there, and just can give some people there peace of mind around being able to take a break if they need one. Does anyone have any questions on that, Dinah?
Sorry, Christine, just finding the unmute button.
Yeah.
Is the tax rate while on, is tax rate while on leave, is it on a lower rate than regular?
No, sadly, because it's all part of your income for that year. So yeah, it's just the same tax. It's just another payment to you in that tax year. And like I touched on before, contractors on average across the year will sit at about a 40% tax rate.
No other questions popping in there.
Awesome.
Oh, hang on. There is one here. I guess super and tax will be taken.
Yes, absolutely. So once you ask, you let us know that you want to take some money out of your leave account, that's when it's treated as normal payment, and the super and the tax is taken out at that point.
And sorry, one more. Any limit on how much we can keep aside?
Not really, but what we had when we first started this was a contractor, this is many moons ago, who wanted to do a bit of tax evasion, so he tried to put 80,000 into it, and we did have to have a little word with him about that. So within reasonable limits, yes, but it's not an opportunity to sort of try and structure payments over a few years. It's not a tax structure, it is a leave account, so it's within reasonable limits. And we can have a chat with anyone about what that would be offline later.
No worries. I think that's the last question there. I just thought I'd let everyone know, Christine, that we have one more of your slides to go, and then Jennifer's slide, and then just 2 to wrap up. So just because we're approaching 1:30, I just thought I would let people know that we are nearly at the end, so stay with us if you can.
Awesome. Thank you. Thank you. Looking at that picture, I can't wait to sort of be looking at that coming out of the Canberra winter. Now, and lockdown. Okay, so superannuation. This is an interesting one because we just cover off on a couple of updates with super. The superannuation guarantee charge, or SGC, the legislated amount that one must put to super is now 10%. That changed on the 1st of July. What also changed was the total contribution that one can make towards super. So the total contribution is 27,500, which has come up from 25,000. That all happened on the 1st of July. So super is a great way to maximise your income, because what you can do is put your normal 10% will automatically go aside, and then you can salary sacrifice. So that goes towards your retirement, and once it's in the super fund, it's only taxed at 15%. So it is definitely a win-win. Because IT contractors are typically high-end earners, what we see happening is that towards March, April, a certain amount of contractors, quite a high amount, are coming up towards this 27,500 threshold. So we have a great database that actually sends us triggers and reminders and alerts around when a contractor is getting to that 27,500 mark. Because once you get to that mark, you can actually opt out of paying super. And so the ATOs recognise that high-end earners will hit that at 10% during the tax year, so there is an opt-out clause. So to help contractors manage that, because if you go over the 27,500, you're taxed at the top tax bracket, which I believe is 47% now. Which no one really wants. So we can work with both sides. So what we can do is do payslip modelling. So if you want to salary sacrifice, then we can help you model that through payslips over the year and let you know that you'll get to the 27,500 or 27,499. But we'll also send out alerts. We'll actually give you a call and send you an email as you're getting close to that 27,500 mark, to give you the choice as to whether you're happy to go over that or that you want to stop that super at that time. So superannuation for some of the community can be very beneficial, and you can salary sacrifice pre-tax deductions straight to your super. For some parts of the community, some members of the Booksorted community, it's more that Booksorted can help you manage that to keep it under that 27,500 and not go up and over and into the top tax bracket. So, Jen, what are your thoughts on that?
Oh, super. This is my absolute favourite deduction. I absolutely love super. The reason being that, so we encourage everyone to deduct it if you can. Any deductions that you are incurring, so if you go down to Officeworks and buy equipment, or, JB Hi-Fi or something, you're paying money to somebody else and claiming a tax deduction. But super is the only one really that you're actually paying yourself. So you're claiming a deduction that goes into your super fund for you to use for your future wealth. So it's you're sort of getting like a bit of a double win there. So I really encourage people to look and make sure they're maximising their 27,500 cap every year.
Yeah, yeah. It's a really good point. So yeah, so we can help you with that modelling. Another part of this is if you're starting with Books Sorted during the year, what we'll do is ask you to let us know how much super you've already paid, because that goes into your total contribution for the year. So it's not just what you've paid whilst you're with Books Sorted, it's what you've paid with other employers, and it's collected from the 1st of July to the 30th of June. So it's your total contribution over the year, over multiple employers. But when you move to Books Sorted, we'll just check in what that is, and that becomes part of our calculation, so that when we get an alert that you're going potentially close to the 27,500, we can let you know. Alternatively, some people don't work for 6 months of the year and then might jump into a contract at the 1st of January, and they then want to make the most of the 27,500. They might be able to salary sacrifice half of their pay or something to get them to that as well. So we can help both ways. But the other part that we like to do is have a really clear understanding of what's already been contributed for the financial year. And then we have a really clear picture how we can assist you to mainly stay under that threshold or make the most of the opportunity to salary sacrifice super, because like Jen said, it's a win-win. It's money to you for future you. Yeah, any questions there, Dinah?
No, I think you've just answered it for Yasmin. She was asking, is that 10% plus to 27,500, or is it a total of 27,500? But she's just realised you've answered that in our last bit there.
Yeah, it is a total, and Yasmin, it's hard to understand, and we get that question a lot because you think, oh, 27,500 is going to be just my statutory amount, but it's your total contribution. Yeah. Very good. Okay, well, if there's no more questions, I'll move to the next slide.
Sounds good.
And that will be Jen, who we have introduced. Like I said, we've known Jen for a number of years and partnered with her over the last 24 months. What we love about Jen and Panorama are that our values align. So responsive, customer-focused service and trying to help you make the most of your hard-earned income. So I will now hand over to Jen, and she will talk you through a very exciting change to cars that came up at the start around April, May?
Yep, start of the FBT year. Yep.
Yeah, start of the FBT year, 1st of April, as
Yep.
discussed in the earlier slide. Questions will be asked later. So now over to Jen.
Thanks, Christine. Yeah, I wanted to talk to you today about associate leases because it's something that a lot of people aren't very familiar with and might not even know that it's an option. There were changes on 1st of July. Associate leases have been around for a while, but there's been some changes from 1st of July that have made them really quite attractive to do. So I just thought I'll talk to you through what they are and how they work briefly, and you might see if that applies to your circumstances. So we mentioned before novated leases when we were talking about cars up above. So novation of a lease just means there's a three-way agreement. So it's got the employer who's Books Sorted, say. We've got the employee who's you, the contractor, and then the third party in it is the lease provider. So that's, you know, your auto car finance or Maxi or whoever you're using. There's another way of doing a novated lease using an associate. So instead of having a lease with Autocar or one of these other providers, you can actually have an associate of yours buy a car and use that to salary sacrifice. So first of all, who's an associate? An associate for FBT purposes is a spouse, a parent, a brother or sister, an uncle or aunt. So usually family members we look for. Or it can be, an associate can actually be a company that you control or a partnership that you're in. What you're looking for is someone who's typically in a lower tax bracket than you. So the most common one we see for these is a worker who's got a stay-at-home spouse or someone who's, you know, studying and not working at the moment, you know, in some sort of arrangement or has a lower paying job. Because what this does is actually helps you get some money out of your top and higher tax brackets into a lower tax bracket. So The way it works, I'm just going to take you through a little example, and you might be starting to think, okay, well, that's me. So I do have a lower income earning person who might be an associate of mine, and I'm thinking about a new car. How might this help me? In my example, we've got John, who's the contractor. So he earns about $250,000 a year. And his wife, Michelle, is off work for a bit. She's just home with the kids. So she earns about $25,000 a year. They've worked out that they want to buy a car for $40,000. And they could go and do the novated lease, which also has fantastic tax benefits. But they've thought, right, well, let's have a look at this novated lease, this associate lease setup and see if that might be even better. So the way it works is the associate, Michelle, she goes and buys the car in her name. That's very important. It cannot be in John's name. It needs to be in the associate name. John's salary sacrifices lease payments, which get paid to Michelle. So similarly to a novated lease, you get your pay reduced, but that's your pre-tax pay. So you actually save tax by doing that. In this circumstance, that money gets paid over to Michelle because she's the owner of the car. Instead of paying it to Autocar or Maxia, it goes straight to Michelle. So she's got that cash in her bank account. Michelle uses that money to pay the running costs of the car. So under this arrangement, the lease must be a fixed amount and include all running costs, which most novated leases do. Some do, some don't, but normally we do. But then Michelle is able to declare that lease income in her tax return, but also claim all the running costs. So she's now operating a little leasing business on the side. Now, that all sounds horribly complex, but it actually is. It comes down to in the setup, we just need to register Michelle with an ABN and a GST. She only has to do one BAS a year, and that actually is far more simple than what it sounds if you're thinking, oh, that's to do that. So in this example, I'm just going to take you down here for the normal novated lease compared to the associate lease. The first section there is John and the second is Michelle's, and together, using both of their tax returns, this is how you would get the benefit. So under the normal novated lease and compare, both of them, $250,000 salary. The salary sacrifice amount reduces his salary. So in the normal one, it was $8,000 because in my example, he's paying for running costs separately. That's why it's a bit less. And Michelle, it's going to be about $15,000. That's going to be salary sacrificed. Now the tax on that for John under the normal arrangement is $84,000. Under the associate lease, it's only $80,000 because we've had this additional deduction there for John because they're reducing his salary by a lot more. So the associate lease is allowing us to reduce it by more. In this one as well, then John has to pay a bit of running costs. So his take-home pay under the normal novated lease, better than not doing a novated lease at all, but it's $149 compared to the associate lease of $153. So we've got a bit of a saving there straight away. Now Michelle, ordinarily, John's salary sacrifice has nothing to do with her tax return. So she's just got her $25,000 and normal $557 of tax. So her take-home pay is $24,000. Under this arrangement, she has $25,000. This amount goes into her tax return. So that is a sum. There's detail behind that, which is the lease income she earned minus GST that she's able to claim on the purchase of the car, minus fuel costs, rego costs, servicing. She's able to claim all of those as deductions. So the net income to her is not the $17,000 that was paid or the $15,000. It's only about $4,700. So she pays a little bit more tax under this arrangement. John's paid quite a bit less. She's paid a little bit more, and combined as a family by using it, we've actually saved about $7,700 in tax for that 1 year. So under this novated lease, if we did a normal novated lease, he would be saving tax compared to if he didn't. But these associate leases just take that one little extra step further by also utilising a lower income earning spouse's lower tax rates. So it's a pretty complex one for me to just shove all those figures at you, but it's one that's it's gaining in popularity because the laws that changed recently was to allow running costs in it as well. So it used to be that novation with a third party, when you can include running costs, it worked out a bit better. Whereas now with associate leases, we can include all the running costs. The deductions are actually significantly better. So that's pretty much what I wanted to take through with you. I'm sure there's going to be some questions about it because I've gone through that very quickly. But just wanted to flag it with you as it's something you might consider as well if those circumstances suit you. So it's a lower income earning associate and a card you were thinking about getting. So do we have any questions about that?
No specific questions there, Jennifer, but Yasmin again is interested in that. And so I think probably having a discussion between maybe you, Christine, and her offline afterwards would be fabulous. She's not quite sure if her spouse would be entitled. So she's keen to know a little bit more.
Yeah, just on spouse entitlement, it goes on the contractor. So the contractor and the employer have to come to an arrangement. So if you're using Bookssorted, of course, they're going to agree. Any salary sacrificing, you cannot force your employer, if you're working for somebody else, you can't force them to let you salary sacrifice. It's definitely a decision by the employer. So spouses will always be entitled to do this. It's just whether it's going to be a benefit, depending on the tax bracket they're in. So you definitely have to, for these ones, look at individual circumstances. But yeah.
Yeah, so there was a specific question around that too. So presumably this associate lease is most beneficial when there is a big income disparity?
Typically, yeah. There is a saving no matter what bracket you're in. So if, in my example here, John's in the top marginal tax bracket, which is 45 cents plus 2% compulsory Medicare levy, so 47%. But then if your spouse is earning less than 180,000, you're already in 39 cent territory. And then down to, under 120,000, it's 34.5. So you're already getting quite a differential there. So it doesn't, my example is very extreme because Michelle is in the 19 cent bracket. But if there is any tax bracket differential between the associate and you, then it would work.
Yeah, so there was a specific question around if Michelle was around the 80K bracket.
Yeah, that's the 34.5 cent tax bracket. So yeah, so the difference between 34.5 cents and the 47 cents, it's not going to be, in my example here, better off by 7,600. That'll probably reduce by a bit. But again, it's probably best just to work through your specific circumstances with Christine, and I can do in a calculator for you and just see what would you be working out best off.
Lovely. There's just a question back on salary sacrifice here. How do I work out the salary sacrifice of $17,500 per year from the cost of $40,000? Is that something I can calculate on my own?
Is that the one in my example there?
I'm not quite sure.
Imagine. I think it might be. So
yes, yes, it is.
Yeah. So the salary sacrifice in this example is, you can work out yourself, there's quite a few calculations in it, but it's basically the lease payments that the employer paid to Michelle minus input tax credits. In this one, I think they include running costs, so that would be the difference, I think. So the GST basically is the difference. Does that answer the question?
Just waiting to see if anything pops through there.
And this is a little bit more complex than some of the other things that we've talked about. So Jen and I are happy to meet whoever's interested in this and have a coffee and run through some scenarios on our laptop so that you can see the numbers and see if it's going to work for you. I think one of the points around this is that the associate, and it doesn't necessarily have to be a spouse, it can be a family member, it's quite a broad term, that they need to have an ABN and they need to be registered for GST. So and then there's that GST piece at the end of the financial year as well. That would need to be sort of, there's a little bit of work around that. So it is, it's a fantastic opportunity for people that are in the position where they have an associate that is on a lesser income. Like Jen said, even dropping by one tax bracket, no, the gain might not be 7,600, but it would still be significant over the period of a financial year. So we can certainly work individually with people out there that are interested to push through some numbers on a calculator spreadsheet that we have, and then talk further about that. But I loved your analogy Jen, around Michelle being her own little auto car finance or her own little,
Yep.
her own little leasing company, because that then makes a lot of sense to me. But I have worked with novated leasing and understand it quite well because I've worked with it for over 15 years. But I appreciate for some people that have never had a novated lease or are new to any car leasing, then this may be quite a bit to take in, which I get.
There has been a little giggle to say that it sounds a bit complicated, but as you've said, people can absolutely come to both of you for more advice.
Yeah, absolutely. And I think that's the best way this would work is if either Jen and I or both of us come out with our laptop, have a coffee and run some numbers, and then you'll get more comfortable with it, and then it will make more sense. But yeah, it's a lot to take in over lunch in lockdown, that's for sure. So just another great opportunity to maximise your pay, and because with Bookssorted we're always looking for obviously legitimate and compliant opportunities for everyone in our community to be able to do this. Anything else, Jen?
No, that's it from me, I think.
Yeah. Any other questions, Dinah?
No further questions, Christine.
Very good. Okay, so we were, Michael, who has worked with us for a number of years and can sort of take that maximise your pay piece to the next level in terms of investment properties and things like that, sadly has a sick child and couldn't be with us today. But what he has offered is a 30-minute over the phone consult. We personally, my husband, and I have worked with Michael for a number of years and found he just thinks outside the box and makes really great suggestions and goes above and beyond, so aligns with Bookssorted and Panorama's values around going above and beyond with service and just thinking outside of the square to help people make the most of their income. So his number's there if you want to jot it down, or please reach out to us if you want his details after the seminar, and he can set up a consult, and then you can see if you connect with Michael and if you think there's going to be some value there. So yeah, so hopefully his sick child will get better and we can see him at the next webinar or seminar hopefully, but there's his number if you know that's something that you're looking at doing in terms of investment properties and things at the moment. Yeah, so we'll move to the next slide. Oops, might have got a bit fast there. So sorry about the black screen. I think I double hit to the last slide. I hope everyone enjoyed the webinar. Dinah, are there any final questions there?
Nothing popping in there at the moment.
All right.
There is a positive comment to say that this has been great.
Awesome, awesome. We love your
extremely
feedback.
Helpful. Oh, that's a bit nice. Chrissy, Jen and Dinah, you're all rock stars. Thank you for the session.
Oh,
I've been called a rock star before.
Yeah,
me neither.
We don't get that a lot in the accounting bookkeeping space, do we?
No. We'll take it.
Yes, yeah, well, definitely. Thanks everyone for coming along. Really appreciate you giving up your time. If you have any further questions in and around this or for your own unique situation, please let us know. Whilst we're in lockdown, if you're interested in something like the associate lease, we can simply do a Zoom or a Teams and share screen and talk you through how that works and get you comfortable with that process in that sort of platform, or when $50 million question, when we come out of lockdown, we can also meet up with you face to face. So happy to do virtual coffee chats and go through anything that you might have. But what I would encourage you to do is any sort of major purchase that you're thinking of doing, if you have a tiny doubt if it can be salary sacrifice, please feel free. 9 to 5 every day the phones are available. Please call and just make sure that it will be a legitimate salary sacrifice business expense, because we'd hate you to spend the money and then potentially have to wait 8, 9, 10 months to be able to get the tax benefit on that, or that it could be only depreciated and and not fully salary sacrifice. So please call us at any time regarding anything. We're there for you to help you out. And yeah, thanks for your lovely comments and really appreciate your time. Jen?
Yeah, thanks everyone. It's been great to have a chat to you about all this sort of stuff, and always available to help and talk through any specific questions you might have.
Excellent. And thank you, Dinah, for all your love and support today. We really appreciate it.
No problems at all. And I've just popped the Booksorted email address and phone number in the chat, because for some reason I think our last slide has fallen off, Christine, with the contact details, which is very odd.
It slid off the slide deck. I get it. Excellent. Okay, thank you everyone so much for attending. And like I said, any questions, please let us know. And please, over everything, please stay safe. Thank you.
Stay safe, everyone. Bye-bye.
Bye.
Bye.